Abraham náà rìn lẹ́nu bẹ́ẹ̀. AB, Abraham, can you see my screen? All right, guys. So please, I would like to let's start by Mr. Christiana. What question do you have for us today? Don't worry, just start from anywhere. Okay, okay. Trading view, right? So, so tiny. I don't understand what tiny line. Please, please do now. Let me see it. Okay. All right. So yeah, we start with our tradingview.com. Then I don't know. Okay, someone should give me what coin do we analyze now? What coin do you want us to analyze? Eh? Yeah, okay. Yeah. So the full meaning of Stia is celestial. All right, so it's loading up. So Mr. Christian, I'm expecting your this, you know. Okay, sister Anu, you're welcome. Oh. Yes, wow. I said I'm expecting the screenshot you are talking about. You can see my this thing on this token. I'm still trying to long the token. No, just do it now and send it to my DM. Send it to my DM, then I'll attend to it in this video. That's the essence of the video. All right. So, sister, let's start with Bro Abraham. Let's have your question, please. Long and short position. Yeah, 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 yeah. Okay, I understand you now. Yeah. Okay, I get you. I get you. Let me answer the question. So now I'm going to explain one or two things before we move forward. First of all, whenever you want to trade, first understand the direction of your market. Ejeba, Ibrahim, please mute yourself, please. Thank you. So whenever you want to trade, make sure you first understand the direction of the market. You don't just go to your 30 minutes time frame, just like the explanation I gave you. You don't just go to a 30 minutes time frame and just begin to trade. If you do that, you may end up losing your money. So the first thing, I'm going to give you two sure time frames that I want you to start working on. So whenever you want to work, let's do that first. Let's change our time frame to 4 hours. You want to analyze your market first, go to your 4 hours time frame so you can know the market direction. So here we are on the 4 hours time frame. Here we are on the 4 hours time frame. So I'm going to do something now. Okay, I guess someone wants to join. Let me try to add the person to you. Okay, all right, all right. So first, go to your 4 hours time frame. Me, if I want to make use of chart pattern or yeah candlestick pattern and the like, so I will start with my daily time frame. But now let's go for a 4 hours time frame. I want to make sure this teaching is as simple as possible. So now let's go to our 4 hours time frame. Now this is our 4 hours time frame. Okay. So here is our 4 hours. I'll remove all these trend lines that I've drawn here. I'll remove everything. Sorry, all these rectangular line rather. Okay. So I said something. There are some things you need to understand. Your market structure. What is the direction of this market? That will be the first question you will ask yourself. What is the direction of this market? Now, as you can see, the market is bearish. How do I know that the market is bearish? Remember when I start the class, I said if we are going for a bearish market, we see lower low and lower high. Let me draw something like that. Let's write. Let's write. Lower low, LL, we have lower low. LL means lower low. While L-ish means lower high. So it means that whenever you see, let me drag it now to a low. This is a low. Can you guys see what I'm showing you? Please, if you can see it, give me a response, please. Can you see it? Or you can just okay, you can just drop it. There is a box for text. So you can type it there. All right. You can type your response in that box so I'll see what you are saying. All right. So we have the lower low, we have the lower high. So this is the lowest point. Let me extend it. This is the lowest point that this coin has reached. Now we now draw your lower low. You put your lower low there. This low, sorry, this is another low, but this low is higher than the previous low. Are you guys getting it now? This low that carries LH is lower than the previous low. So that's why you call it lower low, lower high. So now, if you want to create another pattern now, it will create another low that is lower than this one. That's how you know if your coin is actually in a bearish position. I mean, bearish market structure or a bullish market structure. Now, let me do something now. This is a lower high at the top here because this is the highest point this thing gets to. Or no, let me change it. It's not lower high. This is not lower high. I'm coming. Let me change it and call it high. High-ish. All right. This is our high at this point. So you can call it high. You can call it higher high because it is higher than the previous high here. But because we are going for a downtrend, let me call it high because this is the highest point the coin has gotten to so far. So you name it high. These are the things you must understand whenever you are trading. First, map out your market structure. Is this thing going up or this thing is going down? Please, I want to attend to someone and just tell the person to join the class. He's also one of our students. He's also one of us. All right, guys. So I'm back. So this is our high. Then you now take a look at where we have another form of retracement. Retracement means where the price gets to and it goes up again. So this is the high. Then get to this place. So we might use this place if we are looking at it from a lower time frame. This level, let me circle it. This level is a low from a lower time frame. So you will just, sorry guys, let me just ask him now. Let me send him the link. All right, so I'm back. So these are under low. Let me draw under low again. This level is under low. This level is, you can call it under low. This level can be regarded as under low. So when we have high here, then because this high is higher than the previous, this high now is higher than this level. So you now call this one lower low, or let's call it L, which is low. Okay, please let me accept him. All right. All right. So this is high. Then after high, we have a low. So let me type L. And like I said high means the highest point a coin actually got to before it begins to go down. Don't worry, I'm going to explain it when we are in a bullish condition and a bearish market. So currently we are in a bearish market. Now this is our high. High means the highest point the coin gets to before it begins to reverse. Now this is the highest point that I put H, and this is the low. This is the point that is lower than the previous high. So I put, sorry guys, what's wrong with this guy? All right. So this is low. And why do I put it as low? It is low because it is lower than the previous high of this market. Now let me change it to a lower time frame. I'm going to change it back to that 4 hours. I just want you guys to see something. So you can see what I'm saying now. You see the high here. You see the structure here. It is lower than the previous high. High, which is this place. We have low around this level. That's what I mean. I don't know if you guys are getting what I'm saying, what I'm trying to explain. So let me go back to the 4 hours time frame. All right. So this is the 4 hours time frame again now. Now, below this low, we have a lower low. And what does lower low means? It means that it is lower than the previous low. That is what it means. It means that it is lower than the previous low. Then you come, you pick this thing. Let me write under LL. LL means lower low. As simple as that. You put it inside this bracket that I drew earlier. So I'm going to delete this and I will change the color for these guys. Let's change it to something bright. Yeah, let's change it to something bright. All right. We have the high, we have the low. The low means that it's lower than the previous, as I explained earlier. Then here we have the lower low, which means that it is lower than the previous low. Are you getting now? This low is lower than the previous low. Then we are going to draw another lower low. I'm coming, guys. So picture this thing again. Right under L. That is lower low. So you put it around this level. Even though it tries to break this structure, but it could not break it, it could not sustain it, it tanked down. Then you write under lower low again. LL. LL means lower low. You draw it and you bring it to this level. So it means that from this high to this low, there has not been any change of market structure. And what does change of market structure mean? Let me show you something here. If you look at this market, let me just draw something around this place so you can know the exact thing I'm talking about. This entire market here, if you look at this entire market here, you will see that it changed. It was formerly in an uptrend. Then the moment it gets to this level, I'm coming. Let me draw the level. Look at this level. So the moment it breaks below this level, can you see what I draw there? Let me try to expand it. So look at it now. You can see that while the market was coming from an uptrend, it was going down, it got to this level, it stopped. The moment the market get to this level, it stop and it go back up. Then it creates a high, which is higher than the former low. It creates a high around this level. Then from this high, it retraces down to this level. Then after retracing, it will move up again to this level. Let me draw it. Let me do something. I'm coming. Let me delete this one so that I just want you guys to try and understand what I'm trying to explain. Brush. Okay. So you can see that the market is coming like this. My network is bad though. My network is bad. Can you guys hear me? Okay, my network is bad. The thing, whatever I'm drawing is not drawing. Okay, so this is what I'm explaining. This is a bearish market. You can see that it get to this level, it changed structure from bearish to bullish. You can see it changed from bearish to bullish. So the question is, how do we know that it changes from bearish to bullish? We know that it changes from bearish to bullish because it broke the previous structure. This is the lowest point initially. Around this level is the lowest point. Why it was coming from the top going down. So the moment it meets up with the previous low, this place is the previous low, and this one meets up with the previous low. So from low, it creates an high. So let me delete all these guys. From a low, which is from this low now, it creates an high. So let me write it there. L, this is the low. At this point that I put L is the low. Then it creates an high that is higher than the previous low. Ish. You drop it here on top of this one. I don't know if you guys get what I'm saying. This was a low, means that the lowest point it gets to. Then from this lowest point, the market changes its structure to create a high that is higher than the previous low, then you call it high. Then from then, the market creates another higher high, which is this level. It means that this high is higher than this previous high. Then the moment you see this, you realize that this is a market, the structure of the market has changed from a downtrend, which is from this downtrend to an uptrend, which is this level. It changed from downtrend to an uptrend. And the moment you begin to see that this market changes from a downtrend to an uptrend, you begin to look for your entry. You begin to look for your entry. I'm coming. Let me delete this guy. So the moment you see that the market changed from uptrend to a downtrend, what do you begin to look for? You begin to look for your entry. But the question is, look at the way this thing is. How do I know if I'm doing the right thing? I don't know if I don't want to lose my money. So this is the first thing you will do. Your first entry is wherever the market. So I'm going to draw something now. Go to your text. Sorry, go to your brush. This thing. Get your rectangular this thing and come to the lowest point the market got to. This is lowest point it gets to. Then draw your line, your rectangle, extend it. I don't know if you guys are seeing this now. Now, look at the previous low. Look at this previous low now. You can't see my screen? Wow, but my screen is intact. Oh, don't worry. I'm recording the class, so I also do. Yeah, probably your network. But the screen is, I'm going to drop it on YouTube. All right, look at this low now. Even though the market move up, it still come back to that low again. It still come and retest it. That is after this, it come back and retest this low. Now, you now come back here. The moment you see this structure moving up, that the market is moving up. If you are not careful, you will believe that the market is moving up, so it keep on moving up. No, the market will always come down, grab liquidity, and go back up. Now, this is what is happening now. You see that this is the lowest point that I draw my rectangle here. The point that I draw this lowest point that I draw this my rectangle is my lowest point that this coin has ever reached since we've been trading it. So now for you to know the highest point that this coin has reached, you see that this is the highest point it has gotten to, that it begins to go down again. Now you pick your rectangle box and draw it. Sorry, let me delete this. Pick your rectangle and draw it at the highest point again. So I'm going to explain something to you now. So understand that if the market gets to this lowest point at a point in time, and it immediately go back up, they understand that it will also get to this point and it will go back up again. See, this is exactly what we're experiencing now. You see, the market touched that previous low and it is trying to retrace now. Now, what do you do at this point? You've seen if you see, there is something I explained. I call it swing high and swing low. Swing high means that the highest point that the price gets to before it's retraced, that is before it go back, or it's before it changes structure. Let me just use that word. Retracement means that it go back from wherever it is coming from. If it is coming from the top, it goes down, and if it's coming from down, it go back up. That's the point you need to understand. So this is the point. So it's come from this low, it gets to this high. And what is the name for all these stuffs? The one at the top here, this rectangle that I draw at the top here, the moment your price get to this rectangle, it touch it and it goes down. It touch it, look at it, touch it 1, 2, 3, 4, it almost touch it here, 5 and 6. It touches 6 times. And the moment it cannot break above it, it push it down. It means that this level becomes a resistant level. Resistance level means that a level where your price touches and it cannot break above that level. It is called resistance level. Do you understand me now? So any level your price gets to, yeah, any level your price gets to, and it cannot break above that level is called your resistance level. And below, any level below your price action that your price gets to and it cannot break, it cannot go down again, it is called your support level. It means that that level supports the price from going downward. So this, let me change it. Let me see if I can change the color of this guy. All right. All right. So let me try and change the color. Let me change it to, no, this was not to change the color. Okay. All right. So you can see it now. So this rectangular line, the moment you see it below you, so whenever you want to trade, this will be the first thing you will do. First, recognize your support level and your resistance level. That will be the first thing you must recognize. So recognize, shall relate to Losoke by it is called fake out. Relate to Losoke by we call it fake out. It is trying to grab liquidity. So I want to about, when you put it here, when you put your entry around this level, you want to put your stop loss above your entry. And what did this thing do? It grab liquidity and it begins to go down again. So I'm going to do a special video on liquidity grab. So leave that one alone. So the moment you set your what's the name? Your resistance level, and you also set your support level. Then what do? You will see this is our swing high level and this is our swing low level. Then we will do, there is another level inside of this place. You have to draw it again. There is another level inside of it. If you take a, let me delete it. Then I will show you something. Remember, we are still on our 4 hours time frame. If you take a look at the price, whenever it gets to this level, when the price gets to the middle here, it go up. See, it gets to the middle here, it go down. It creates another here, it move up. Look at it. It creates another one here, it move up. It creates another one here, it move up. Then this is another level. It creates another level where it goes down. It has created another level here. So instead of drawing all this circle or create or write or using horizontal line, just touch it. Let me delete everything now. So instead of drawing all those circles or using, there's another tool we do use here. There's another tool that I use when I started trading. I use horizontal line. I'll just draw it. I'll just put it here, horizontal line. I'll just draw it around my distance. So if I'm just drawing this horizontal line, in fact, I will get confused while trading. I won't even know what to trade. So instead of drawing all this horizontal line, I'm going to delete the horizontal line. So instead of the horizontal line, just go to your text and notes. No, it's not text and notes. Go to your brush and click on your rectangular line and draw a wide distance here. So this will be your, this is what we call deep and shallow pullback. So this will be your shallow pullback around this level. So in order to enter your trade now, let's now assume, now going back to the question Abraham asked me. Now let's assume after drawing all these things, I now want to enter my trade. So I will now go back. First I analyze the movements here on these 4 hours time frame. So you don't enter trade on 4 hours time frame. Your 4 hours time frame is meant for analysis. Don't enter trade on it. Then what do? Go back to your 30 minutes time frame. Formerly, I do use 15 minutes while when I started trading, but now because of the new strategy I'm using, I'm making use of 30 minutes time frame. Now take a look at this 30 minutes time frame. There is one thing I explained to you when I was discussing about this strategy. I said first, come to this place, come to the top here. First, look at this blue line that is moving. It is called EMA, exponential. Is either you call it exponential moving average or you call it moving average exponential. So if you want to get it, you come to this place, indicators, metrics, and strategies. So you click on it. So I already have it here. So you see it here. Just write EMA. So this is it. Let me look for it. Um, EMA. Okay, this is it. Moving, no, that's not, it's not moving average ribbon. I also use moving average ribbon. It's also very effective when I'm trading. It should just display the name EMA, moving average exponential. I don't know why it's not displaying. This is it now. Moving average. Okay, this is ribbon, but I'm using moving average exponential. Moving. Okay, this is it. Moving average exponential. So whenever you type it, just favorite it. All right. Now, this is what I'm explaining to you guys. Please listen to this one very well. If you get this explanation, you can start trading immediately. This one that I want to explain to you, if you get it, you can start trading immediately. Now, look at this thing. Look at this EMA 50. This is called EMA 50. Let me teach you how to make it. This is it now. Yeah. EMA 50. You come to settings. Meant you click on settings, go to inputs and length. You change the length to 50. The moment you change the length to 50, you can do some other styles. The color, you can change the thickness. If you want it to be more thick, you can see that it becomes more thick. If you want it to be strong, but I prefer that light thickness. All right. And we have our 50 EMA here. Now, if I want to trade this, please listen to me very well on this. If I want to trade this token, I will wait. If I'm the moment I know that we are in, look at this thing now. According to what we already draw on our 4 hours time frame, this is our what's the name? This is our resistance level. This purple rectangle up here is a resistance level. So immediately this price hit this resistance, we are expecting that the market will begin to go bearish. But how do you know when to enter into this trade? When to enter this trade? Now, this is what I want to teach you right now. Take a look at this. The moment the price hit this purple rectangle, you see that it comes down. It touch this EMA and go back up again. Touch the EMA going up, touching it going up. You see that whenever I want to enter this trade, I will make sure it breaks below my EMA. Look at it now. Look at the EMA. I will make sure it breaks below this EMA and it begins to settle below the EMA. Take a look at something now. Look at this. Around this level, it still break above the EMA, but it cannot sustain it. It comes down, it move up. So if I want to enter this trade now, I will mostly enter this trade at this level. Let me draw it. At this level that I'm very sure that it breaks is around this level. I will enter this trade around this level. So I want to enter this trade around this level. Why do I want to enter this trade? Number one, I know that it is moving away from my resistance level. It is moving away from this resistance level. The moment I know that it is moving away from this resistance level, and I get to this position where I realize that the price is now trading below my 50 EMA. The moment this price is trading below my 50 EMA, what do? I place my trade entry. Immediately I enter this trade. Now let me delete the circle that I draw. Now this is where your long and short position comes in. On a bearish market, you will use your short position. You click on this short position and look at it. I'm entering around this level. Bro, are you seeing what I'm doing now? All right. So I'm entering around this level. I will draw it down. This previous candle that break my EMA will be my stop loss. Look at it. The previous candle that breaks my EMA will become my stop loss. Then what do I do? How do I know my take profit? There is a possibility of waiting at this level for my take profit because this is another level that the price may want to break. But why won't I want to wait at this level? Because I realize that whenever the price hits this place, it goes down drastically. So I will not draw my EMA. For you that I don't want to lose money, I don't know what is happening in the market because I don't want to lose my money, then you draw your EMA, you can put your take profit at this level. But you realize that the take profit is very small. Look at it means you are risking 2%, 2.64% to make just 3.18%. It's not making any sense. It is not making any sense. So what do? You withdraw your short position. And remember, we still have this level again. You withdraw your short position, getting to this level. I hope you can see this now. And if you take a look at the price, you will realize that the only thing that the price keep on doing from where I enter the price is that number one, the price did not hit my stop loss. Take a look at this. The price never hit my stop loss. Then you see that the price begin to go down and the EMA begin to serve as my resistant level. You see that whenever it comes down, it will go up, hit the EMA, and it will not break above the EMA much. It comes down again. Take a look at the price. It begins to hit my EMA and come down, hit my EMA and come down until it gets to this level. So if I want to take my profit, the moment I realize that it breaks my EMA at this level, I would have taken my profit. But before then, I would take my profit at this level. At this level. And why do I want to take my profit at this level? I'm going to expand this level to show you something. Sorry, guys. Sorry. Oops. What am I doing? Oh, what have I done? What have I done? Hold on, please. Okay. So what I'm trying to explain is this. I want to zoom in this level. All right. You will see that this is hammer candle. And if you take a look at what I tell you, whenever you see hammer candle, when the price is going down and you see an hammer candle, it means that we are expecting a retracement or we are expecting a change of market structure. This is the hammer candle. So the moment I see this hammer candle, immediately I get out of that trade. So the moment the trade begins to come, you see, the moment you see the hammer candle, you see that it begins to break my structure. But the moment I see my hammer candle, I'm out of that trade. Are you guys with me now? So this is how you trade the market with my strategy. And take a look at it now. Immediately it breaks above this level again. Let me go for my short position again. Let's assume I want to take another short position. The moment it comes down, it hits the previous resistance and it comes down again. Look at this level. The moment I see that the price breaks below my EMA, I will take another trade. But I will try to make sure that I stop at the resistance. That is why you first of all go and draw, the support level rather. That's why you must draw your support and resistance from your 4 hours time frame. You see that the moment it gets to this level, it respects the level and it goes up again. So what are we going to do? You will now set your stop loss at this level, where the previous, a little bit above the previous um candlestick that touch your EMA. So this is the candlestick that touch your EMA. Then I draw my take profit below my um getting close to my support area. Now what happens? From this level, it hits my TP, and immediately it hit my TP, it change the market structure again. Now, what am I going to do? I want to enter this trade now. Take a look at this trade now. It is now below my this thing. My is below my EMA, but because this is a it's getting to this support area, I won't take this trade. I will allow this coin to get to hit my support area, to hit this support, and allow it to go back up. So if you want to take a long trade now, let's assume I want to take a long trade. I'll pick my long position. I'll place it above my EMA, and I'll place my stop loss below the previous low. Then where will be my take profit? I will have two take profits. The first take profit will be inside of this previous this thing that I draw. This will be my TP1 inside of my the rectangle that I draw earlier, which is our resistance. So it means that the price can move up from this level, touch this rectangle, and still come down. Then what do? I will have my TP2 at the upper rectangle, because that has been where the price has been getting to and coming back down. So let's do it this way. So this is what I'll be waiting for now. If I want to trade this coin, I will make sure that this coin move up. It comes to this level. I will enter this trade around this level. I won't enter from my support area because of the rules that I give myself. Some people will enter from this support area, and they are very correct. But because of my own rules, I won't enter from this support area. I will allow this coin to go above my EMA. It move above, then whenever I see it come back to the EMA and it supports it, I will enter that trade. And the moment I enter the trade, it will touch the first target, and if it did not come down, it will touch my second target. And that is how you do it. And you place your stop loss below the previous lowest candle. So as I did now, if I want to trade this coin now, I will have to wait. Let me expand it again. So I will have to wait and make sure this candle hits my support area. Now let me tell you one thing. The reason I will wait for this candle to come back above my EMA is because the moment it hits this support area, the price of this coin can still go down. I don't know if you guys are getting me. The moment it hits my support area, it can still go down again. So in order for me to be on the safer side, I will make sure it come back and hit my EMA, and the price will go above my EMA before I take this trade. So you see, my entry is where this green candle from a long position begin, and my stop loss will be where my this thing what's the name, where my stop loss will be below my candle. And let me tell you something that will happen now to this tier. I'm predicting that as it is going down, it will break below this rectangle that I draw. The moment it breaks below this rectangle that I draw, it will now grab every liquidity below it, because a lot of people have set their stop loss below this rectangle. So it will grab the liquidity before it now begins to shoot up. This is what this coin is trying to do now. It will come down, grab liquidity, then go up. It means that it will break below this rectangle. So the moment it breaks below this rectangle, expect our TP to be around 6.3, minimum of 6.3. It may take like 3-4 days, but trust me, we will get to this TP. So I want everybody to put an eyes on this tier now. We are waiting. The only reason tier will go down and keep on going down is if Bitcoin goes down again. If Bitcoin keep on going down. Now, let me give you the second strategy to entering this market. If you want to enter this market, this is the second strategy. I'm going to pull up my stochastic RSI. Remember, I told you there is one thing we call stochastic RSI. So can you see it very well now? Can you see your stochastic RSI? Now, yeah, this is the stochastic RSI. The moment we have two colors here, we have the blue line and we have the green line and we have the yellow line. So when the market is down, you will see that the blue line will touch the end of this thing. You see that the blue line will touch the end of this thing. Are you getting me? The blue line will touch the end. So whenever it touch the end, it means that the market is in an oversold region. It means that the price at that point in time, the price is oversold. So when you want to enter your trade, make sure number one, the market is in oversold, and your trade, that is if you want to take a long trade, if you want to take a long trade, make sure the market is in oversold as it is right now. The blue is below the yellow line. The market is oversold. And secondly, I'm coming. It is oversold. Secondly, make sure your price, your candlestick is above your EMA. The moment you have these two things, you can take your trade. Let me come again. Make sure your blue stochastic RSI, the blue line, your stochastic RSI is in the oversold region, and your candle is above your EMA. The moment it is above your EMA and this thing is oversold, then you can place your entry immediately. You can place your entry immediately. And the moment you place your entry, you will see that the market will go according to your plan. But if the market over is in overbought region, that is when the blue line is above your yellow line, and the market here, what's the name? And the market here is still above your EMA. Are you with me, guys? I don't know if you get this what I'm trying to explain. So, and this market is above, I mean, the candle, if the candle is above this EMA, and this coin is still on the in the overbought region, make sure you wait for it to come to oversold before you take your trade. So the moment it comes to oversold, that is, this blue line comes to the end of this thing, then you will now place your trade. So those are the things I do that have been having consistent profit in the market, that have been having consistent profit. So these are the strategies that I use to trade, and it has been very, very useful for me. It has been very, very profitable. So do we have another question? So bro Abraham, I don't know if I answer your question now. So I don't know if I answer your question now. All right. So let me attend to another question. Anybody with another question? Yes. Yeah. Trade. Yes. Okay. So if you want to take the short trade, make sure the RSI is above here. Make sure the RSI is above, and make sure your candle is below your EMA. Look at this now. You can see that this candle is trading below the EMA. But the reason I don't want us to take this trade is that we are very close to our support level. Assuming what happened here is happening around this level, is happening around this level that I just draw my candle. If it happened around this level, I'm going to call a trade. But because it is happening very close to our support area. So I'm not going to do anything. I'm not going to call any trade until we have a change of structure. Do you understand now? All right. So do we have another question? Okay. Yes. Exactly. Yes. Sorry, I'm seeing something there. Sorry. Sorry, guys. Okay. All right. So now, what am I? I don't. Please, can you explain? Ask again. Ask that question again. Sorry, I got distracted. Yes. 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 Now, no. Oh, okay. Let me. Okay, you mean all these long and short positions that I draw previously, right? No, what we call this one testing your strategy. I use that to test my strategy. Are you getting? I'm not placing a trade before. This is just for you to test this strategy. And I placed this trade some times ago, and I made money from it. So if you want to test your strategy now, if someone teach you a new strategy, there is something that we call, okay, this is it. Look at where my mouse is. You will see something like strategy tester below my screen. You will see my mouse shaking now. There's something they write there, strategy tester. So that is all this thing that I'm drawing. That is where I test it. That's where you will test the strategy and see your win rate. So if someone give you a strategy and they say, "Oh, yeah, go and test that strategy," that's where you test it. But let me see if I can do something like that. So this is it now. If I want to test my strategy, I will choose the indicator that I want to use, which is EMA. But I don't want to do that in this video. I'm going to make a video for that. So I'm not going to do that right now. So I'm not testing it. I'm not doing that for now. So, but I'm going to make a video on tech because I don't even need to make a video because from what I've done now, you can see that my strategy is working like fire. So you can take a look at these things now. So these are the this back testing now that I'm doing. Okay, yeah, we call it back testing. All this back testing that I'm doing is to show you that my strategy is working. That's the essence of all this back testing that I'm. And I've been doing it since last week, and I'm very sure that when I'm doing it, I show you guys my trade and I show you guys my profit in the trade. So it's not that I'm just telling you guys, you guys should just do this. I'm doing it and I'm showing you what I'm doing, and I'm making you guys to see that this thing works for me. I hope you guys get it now. Mm. So, do we have any question? Yes, you're free. Yes, yes, you are free. Yes, yes, but yeah, and place the trade. Exactly. So let me show you now. Let me show you now. You see that this thing, this long position that I have here, you will see that I have two colors. One is green and one is red. Can you see that clearly? Okay. So now the green means the beginning of this green is where you enter your trade. And the red here is where you place your stop loss. Now let me delete my previous positions that I draw so that you guys, what do, what do you say? All right, let me come again. Yeah, we have it now. I said we have the green and the red color here under this long position. And this is where you also know how much you are going to make or how much you are going to lose in this trade. So if you take a look, you can see me now that I place my mouse on the red, and below it you will see it right stop 0.262 and percentage inside of it, which is 5.44%. It means that if I enter this trade at the beginning of this green color will be my entry point, and the red color, the end of this red color will be my stop loss. It means that I'll be losing 5.44% on 1x leverage. If I'm using 1x leverage, I will lose 5.44%. If I'm using 2x leverage, I'll be losing like around 11%. If I'm using, so depending on the leverage you are using, that will be the calculation of the amount you'll be losing. And let's go back to our profits. It means that if you use just 1x, you'll be making 30.94%. If you are using 2x, you'll be making around 60 something percent. And like me that I use 10x, it means I'll be making around 300%. So this, oh, okay. So here we are now. So here we are. Allow this. All right. So as I was explaining, when you want to enter this trade, let me cancel this and do it again. First, you um this place, you will see your long position. Let's assume we want to take our long position. I've seen the long position. Then I will wait for the candle to get to my to settle above my EMA, not just cross. If you see all these candles, they were only crossing the EMA. None of them settle above the EMA. That's why you see that it still come below. So now I will wait for the candle to settle above my EMA. So let's assume it settle above my EMA around this level. Then I will draw my that will be my entry point. And I will draw my this thing. I will allow it to move up. Let's assume I'm stopping around this level, and I will draw my stop loss below the previous low of the candle, below this previous low. Now, are you guys with me now? So the moment I draw it below this previous one, I want to long this coin. You see it around this level. So EBT green at the red, like this line that separate the green and the red this thing will be our entry point, and the end of this red line will be our stop loss, and the end of this green line will be our take profit. So that's how you set your entry, stop loss, and take profit. Do you get it now? Yeah. So that is, and if you want to go for a short position, let's assume I want to go for a short position now. I will click on short position. Remember that this candle now settles below my EMA. I will enter, let's assume I enter at around this level. I enter around this level, and above my EMA, above the last candle, this is the last candle. So I will now put my stop loss above this last candle, and I will draw my this thing. Let's assume I draw it till it get to this level. So you will see that this candle will not get to my it will not hit my stop loss, and it will continually it will continually go down. It will not hit this stop loss, it will continually go down. At the moment it gets to this level, if peradventure it gets to this level, it touch this level, then I will make my money. But why won't I do that? The reason I say, just like I explained the other time, the reason I will not take this short position is because this level, this place that I draw my triangular line, has proven to be a strong. It's proven that it has proven to be a very strong resistant support level rather. It has proven to be a very strong support level. So you now begin to look at it from time past. Twice here, it support the level twice. If you go back in time, it keep on supporting that level. Look at this place. It was about to touch it. It moved back up. Look at this level. It support it here. So if since this place is a strong support level, then what do we do? You will wait for this candle. I mean, you wait for the market if it is going to go down or if it's going to go up. Now take a look at what is happening now. Take a look at what is happening. You see that the moment this candle touch entered into this box, you see that it begins to go back up. But it might still be a fake entry. So some people now immediately they see that it is the candle is green, they will go for a long position. But like I said, according to my strategy, I'm not going for any long position. I will make sure it settles above my EMA before I can take a long position. I hope you guys get what I'm saying now. All right. So do we have another question? If you have another question, please ask. Okay. Sister Christian, do you have a question? Okay, go ahead, please. Okay. 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 So this is it. When analyzing your coin, it's not important that you only see hammer candle. That's why we have different candles formation that may form. You may see doji candle, and the moment you see doji candle at not just anywhere, you meant to see it either at your support level or at your resistant level. Then you know that those candles they are signaling a trend change. It doesn't mean that you don't rely on those candles, but over time, those candle formation has always signal a trend change. You know, like I told you the other time, the moment you see that hammer candle, the first thing that will come to your head is that a trend change is about to occur. That should be the first. That's the psychology behind all those candles. They are telling you that a trend change is about to occur. So if it now occur at your area of support or resistance, and you follow your distance and realize that this is a trend change, oh, then you place your order, or you place either your buy order or your sell order. Do you understand that? So please, everyone, go back to that candlestick trading Bible that I gave you and begin to study it again. Go and study everything. Make sure you understand it. It will help you more. Okay. So do you have another question? Any other question? Madam Kemisola, Ó dà pé wọ́n ń gun plane níbẹ̀ yẹn o. Ó dà pé wọ́n ń gun plane níbẹ̀ yẹn. Wọ́n ń pariwo sí mi létí. All right, do we have another question, please? Okay. The essence of the Bybit, this place, this trading view, you don't place trade on trading view. You use trading view to analyze your trade. Are you with me? Trading view is meant to analyze trade. Then you place the trade on your Bybit. That is where you have the money to trade. You place your trade on Bybit. Are you getting me now? Aha. So this place is just no. This is trading view. Trading view is a place where you analyze your market. It's a place where you analyze your market. Why Bybit is a place where you place your trades, an exchange for trading. Why Trading View is a place where you have your data of your exchange. Are you getting it now? You have the data of that exchange on Trading View and on Bybit, on Binance, on KuCoin, on all those guys, all those stuff. That those are the place where you place your trade. So, do you have another question? Any question, please, from anyone? All right, ma'am. Yes. You are trading. Okay. Uh, Okay, I get the question. So when your trade hits your stop loss, that's why you set stop loss. Stop loss means that you stop your loss. You don't want to lose more money. You create your stop loss. And your take profit means that when you when the market gets to a particular place, you want to get out of that market and take your profit. That's why we call it take profit. So when the market did not hit your take profit and it did not hit your stop loss, even when it is negative, you will still be in that market. And if you have enough liquidity, that if you have enough money and you did not set take profit and you did not set stop loss, and the market is going against you, if you have $10,000, the market will make sure it consume all of your $10,000 until you don't have anything before it send you out of the market. And if you are going for a long position and you are lucky and the price is just going up and up and up and up until you set your take profit or until you choose to get out of that market, you will still be in that market. Even for 10 years, you will still be in that market until either until you intentionally stop the market or the market hits your take profit or it hits your stop loss. Now, let me give you this advice whenever you are trading. Immediately you are trading and you know that your price has hit at least 30%. When your price gets to 30%, if you don't have the heart, close that trade immediately. You've made enough profit. Close the trade. Are you getting me now? And if you feel like this coin is still going to my direction, now take a look at my screen now. You know that the beginning of this green this thing is your entry point. So you will now drag your stop loss. Where you put your stop loss, you will now drag it to your entry point. Do you get it now? The moment you drag your stop loss to your entry point, it means that even if the market go against you, you will not lose your money. That is, you can only do that when your market gets to at least 30%. That is, I mean, when your profit gets to at least 30%. So you will now change your entry point where you entered. You will not place your stop loss at where you entered the market. So then you can now go and sleep, relax. So it's either you make money or you don't lose money. You understand now? All right. So do we have another question? Any other? All right, sir. Yes. Okay, UNFI, UNFI. Oh, yeah. Okay. So number one, about the UNFI that is closing on November 4th. The exchange says that they will be delisting the coin. Delisting means that they will be sending the coin out of their exchange. It will not be working on that. I mean, you won't be able to trade that coin on that exchange anymore. And remember, there is one thing I call fundamental analysis when you started this class. The fundamental analysis simply means news and information about a particular coin. So it is this exchange that tell us that we this coin did not the criteria we give to each coin that we list on our platform. This coin did not meet the criteria again, so we will be delisting it. So that information will cause the price of that coin to begin to go down. That is the fundamental analysis. It will cause the price of that coin to begin to go down. And what will every trader want to do? They want to make money. So instead of longing it, everybody begin to short that coin. And you will now see the price of that coin begin to go down. And take a look at it. It goes down. There was a day it gets to $8. And from that $8, it goes down back to $1. Let me show you the coin. Let me show you the coin now. Look at it now. You see, look at me. Look at where I short it now. I entered at this level now. I begin to short it at this level. I place my stop loss at the end of this green this thing, and you look at where I want it to get to 1.0. It means immediately it gets to 1.0, I'm out of that market. You take a look at it now. It is still playing according to what I want, the way I want it to play. It's still playing according to my plan. Can you see it now? So immediately it gets to 1.0. Either it gets to 1.0 in the next 2 days, or it did not get wherever it gets to in the next 2 days. I'm getting out of that market. Are you getting me now? If you take a look at it, you see that it can never hit my stop loss. One, Biba play. It can never hit my stop loss. And it may not hit my TP, but that's why I will keep on monitoring it till the middle of the probably before 12 o'clock on 4th, 12 o'clock in the midnight, before 12 o'clock. Or as I think they will be delisting it by 10 a.m. on 4th. So I can still trade this coin till 9 a.m. So by that 9 a.m., I will close my trade and those guys will delist the coin. So Binance is delisting it, Bybit is delisting it. So I don't know about the rest of this thing. And that is why that fundamental analysis is what caused us to begin to trade it on the lower side. Take a look at it now. Take a look at from where it begins to go down. Take a look at it. Can you see it? It begins to go down from 2.6. I begin to short. Take a look at it now. See my EMA now on 30 minutes time frame. See, it begins to trade below my EMA. Take a look at it. It begins to trade below my EMA. You can see that my strategy is mad. The moment it begins to trade below my EMA, and I just it goes below again. I want it to go below. Then what do? I keep on trading. I'm still in this trade now. I'm still in this trade. I'm waiting for it to hit my target, and we post it in the group, and we enjoy ourselves. So God bless every one of us in Jesus' name. And for our meme coin trading, that meme coin will be the last class. We cannot end our class because just like I said, for the next 10 years, God's keeping us. We are still in this group. We are still making money. So that's what a lot of people don't know. Those that refuse to join the advanced class, that's what they don't know. We are still growing, we are still moving inside of this group, we are still making money. Even when you become an expert, except you decide not to be a part of us anymore, you are still a member of this group. Very soon, we are going to migrate ourselves to Telegram. Very soon, we migrate to Telegram. So, do we have another question? Okay, okay, yeah, yeah. Yes, very, very advisable. That's what I just explained to Ross this morning. That's what I'm explaining this morning. Don't worry, don't worry. I'm going to post this video on my YouTube channel so that everybody can go there and watch it over again. What trading is because you won't lose your money and you won't get discouraged. Because as good as my strategy is, we still lose money. Understand that you cannot be 100% accurate in the market. Market will whine you. Well, in order not to lose your money, in order to stay encouraged, that's why I asked you to start trading now with demo. So when you are now sure of yourself that I can enter the trade with my money, then you now go to live trade. And if you lose your money, that's your problem. But I'm very sure that with my strategy and what I've been teaching you, Tobe could lose also. So another question. Uh, yeah, yeah. All right. So that's a beautiful testimony. So do you have any other question? All right, sister. I know you can come in, please. You can ask your question. Yeah. Yeah. The time frame. Yeah. Okay. Okay. Oh, yeah, I get you. All right. So, like I said sometimes, I said we have two main trades on Bybit or all these exchange. There are two main trade that we do trade. We have the spot trade and we have the futures trade or perpetual trade. So if you want to swing, let me give you an example. When I bought Solana when Solana was between 38 and $40, between 38 and $40. So I bought six Solana. Now when I sell my Solana, the price of Solana was 180 something dollar when I sell it. Now, what do I do? That is called swing trade. I bought it last year, not even this year. I bought it around November, September, October, November, December. I can't remember the exact time. I bought it 30 something dollar. So I bought 6 Solana in Bybit. I bought 6 Solana in Binance. That is 12 Solana. And each of them gave me at least $1,500 each. I mean, for that 6 Solana now, is around $1,500, which I bought around that $200, maybe $300, Mofirangba, give you over 1,000 something dollar. So when you know that this coin has future use case and it's a powerful coin, then you will buy it on your spot trade. You really touch buy from meme coin tomorrow for you buy. They are spot trades. Those meme coins are spot trade. So I said we can leave it for the next 6 months. That is swing trade. We are leaving it for the next 6 months. And for that period of 6 months, I said it can become $1,000 plus. The price can become $1,000 plus. So that is what we call swing trade. So you are leaving it for a long time so that you can have maximum profit. So right now, if you have money now, I will ask, okay, guys, there was a coin I dropped in our announcement group then. There was a coin I dropped in our announcement group. And I said we should buy it. I put the price you will buy it against bull run. I drop the price there. So whenever your assignment is to begin to monitor that coin, whenever it gets to that price, what do? You place your buy. You will not leave it till the end of bull run. The moment we are ending bull run, you sell it. That $10 can give you $100. That $10 coin can give you $1,000. So those are what we call long or swing trade. And you can also do swing trade on futures trade or derivatives. Orúkọ tán pè gan ti pọ̀. Ìgbà tá a bẹ̀rẹ̀ ń gbà yẹn futures ni futures ń jẹ́. Now they call it derivative, they call it perpetual, they call it futures. I don't even understand them again. They just want to blow our head with English. So what do you do? Whenever you see that the price of a coin, assuming this UN5, assuming they are not delisting it and crash $1, you will daily time, go to your daily time frame and see the highest point it has gotten to. Come here now, look at the daily time frame and let's see the highest point. Let me even do it like this. Are you seeing a lot of things now? So UN5 has gotten to $14. The price of UM5 has gotten to $14. So it has lost over 99% of its price. Right now, UM5. So assuming these guys are not delisting it, what will you do? The moment it get to this level, you just buy it. You can buy like 20 of it with $20. Let's now assume from 20, it now go back to $14. How many dollars is that? So $20 gives you around $140. That is on spot trade. If you are not trading it on futures trade, you not place your buy now, you just forget it. And it gets to $14 on 10x leverage. My sister, you don't become millionaire in dollars, you don't become millionaire. So that's how it is. That is how you differentiate the long trade, the swing trade. And there is one thing we call intraday trading. You can do that on just okay, no, in now scalping, rather scalping. You scalp on 15-minute time frame. You can scalp on, but because of this, I don't want this thing to get too long. So you can drop your question, whatever questions you have in the group. So I will make videos on it and I will send the link to you guys and watch it. Have you guys understand now? So do you have another final question? Just one more person. One more question. Exactly. But the only reason you won't go for fundamental analysis is that me, I've done my fundamental analysis. So I will just drop the coin in the group that you guys should just like go through the coin, buy it whenever you have the money. You get it? Something like this, all this meme coin that I drop for that I buy for you guys. I've done my fundamental analysis on them. I realized that they have good use case. That's why I said, okay, guys, let's buy this coin and wait for a period of time. Yeah. There are some you cannot use Bybit. Example, this meme coin that I buy. This meme coin are not yet on centralized exchange. They are still on decentralized exchange. So you cannot buy them on centralized exchange. Don't worry, I will do a class. Whenever we want to go for our meme coin class, I will tell you more about decentralized exchanges. That is a part that I never touch at all. And I intentionally did not touch it yet. You're welcome, sir. All right, guys. I hope you were able to learn one or two things in this live class. I'm expecting something big from you guys. Like, I'm expecting something big. And please make sure you are doing your practices, you are learning, and you are still learning. Go to YouTube, get your resources on YouTube. Whatsoever you get on resources that you didn't understand, send the link to the group. I will watch it and I will explain to you. Thank you very much, everyone. Do have a wonderful night and enjoy the rest of your day. All right, guys. You are welcome.